You're going to be shocked. That's what my next guest says about the housing market. Charles Lieberman is the Chief Investment Officer at Advisors Capital Management. He also, by the way, was the former head of monetary analysis at the Federal Bank of New York. Chuck points to new housing inventories, which haven't been this low since 1968. The population has grown substantially since then. And so, Chuck, doesn't add up necessarily. If it depends on if the housing demand does pick up. What do you see happening in this scenario?
Well, we overbuilt dramatically, which obviously blew up, and we had the entire collapse in housing and the crisis. Since then, we've been dramatically underbuilding. They're making up for the overbuilding. The underbuilding has been now going on for a few years. We've dramatically underbuilt. There's a great article on the front page of today's New York Times about how families are doubling up. So household formation is being accrued, shall we say. It's not manifest in the market. It's actually building up. A lot of kids who got out of college, couldn't find jobs, they moved back in with mom and dad. There's a lot of that stuff going on. So demand for housing is not that strong yet. The missing ingredient, of course, is jobs. As soon as people find jobs, those kids, they're moving out. As I joke, the fact that they moved back in with mom and dad was a circumstance that was desirable by neither party. So at the first opportunity, they're moving out. And of course, the families that are doubling up are not happy about that as well. So as we see the job market improve, we're going to see a sudden increase in household formation, which means more housing demand.
Well, of course, let me take the two sort of parts of that, the two sort of suppositions there. First of all, that the kids will move out immediately. I mean, sort of anecdotally, I know some people. I have a cousin, for example, who's living with his parents. He's a fairly recent college grad. He's got a job. He doesn't seem too terribly anxious. I mean, do you think that in some cases people will get used to the idea of having more money from doubling up or from living with family? Certainly, you know, European cultures in particular, college grads live with their parents until they get married in many instances. Do you think it could be a broader cultural shift? You think it's just a temporary situation? Well,
it's not going to be like they get a job and suddenly the entire population suddenly moves into the housing market. What is happening, of course, is that behind them, each cohort, each year, has another year behind them. And the underlying trend in household formation in the U.S. runs about 1.5 million. So to the extent that we only have 500,000 households formed, that's 1 million that is added to the potential pool of new household formation down the road. A year goes by and you get another 1.5 million, and you can split them up however you think they're likely to split up. So the underlying demand for housing in the U.S. is in the ballpark of about 1.5 million units. We're only producing about 600,000 units. So the gap between current construction and underlying demand, not necessarily manifest demand, but underlying demand, is huge. It may take a couple of years before we fully get back to 1.5 million, but expectations are dismal. No one expects the housing market to recover. You hear comments all the time about housing values falling another 20%. Even though over the past year or so, housing values have been roughly flat. So the expectations are extremely low, and people are absolutely not primed for what is likely to happen.
Well, what about the Case-Shiller numbers that we got yesterday? I mean, that didn't show flat. I mean, it showed a decline of about 0.8% if you look at the prices. Is that flat in your book?
After 20 to 30% annual rates of decline, 0.8% qualifies as pretty flat.
Now, let's take the other supposition that you talked about, which is the job market coming back. I mean, I think people expect it to come back. It's just a question of the magnitude and the rapidity with which it's going to come back, and there's no great optimism there.
Well, even if it doesn't perform up to past levels, right now we're running roughly 85, 90,000 jobs per month on a net basis for 2010. If we got up to 200,000, that would be significant, and yet still below par. At this stage of the game, it could easily be 300,000 or more. Again, the unemployment pool is huge, so there are a lot of people out there looking for work. In order for them to get higher, the economy is going to have to be much, much stronger. But if we merely double the pace of job hiring, that will have a major impact on the economy. First of all, it generates a lot more income. It enables a lot more people to move out into the housing market. That means more construction, therefore more people get employed. And it all sort of becomes self-reinforcing and spirals on itself to the upside, just as we saw the downside of that during the collapse.
Let's now talk about some of the stocks that you're betting on as a result. Now, one of these that I found particularly interesting was Sun Communities, which is actually a manufactured housing company, or it makes trailers, essentially, right?
Well, that's actually more of a manufactured housing REIT. It basically rents out trailer communities. And what's very interesting is, of course, as people get displaced from homes because of inability to pay mortgages, they have to move somewhere.
Right.
And one of the places they've been moving into are these trailer communities. So Sun has been doing quite well.
I mean, it's sort of an amazing chart. Anything housing related.
Anything housing related, and if you look at the yield on this thing, it's dramatic. So it generates a lot of income. We use it for clients who need income, who are retired and living off their portfolio. So it's a great income generator.
Yeah, 7.5% yield.
And that's at the current price. Several months ago, when the stock price was depressed, the yield was in double digits.
So if your bull case for housing, though, is right, won't that start to reverse as people start to move up as they, as the job market improves? Won't they start to move up into single-family homes?
They'll move back into housing, that's right. But we're also playing this in a lot of different ways. For example, we have exposure to USG, the old US Gypsum. Obviously, as new construction picks up, they're going to have to use more board to build those houses. That'll be very good for them. We're playing it with NVR, which is one of the home builders, very well-managed company, didn't take on a lot of debt, in fact, almost no debt. This company was profitable right during the depression in housing. And again, not a cheap stock in absolute dollars, but a cheap stock on a price-earnings multiple basis.
And another one of them is Colonial?
Colonial Properties. Again, another apartment REIT. Again, another beneficiary of the people looking for housing, especially rentals. I was at a real estate investment trust conference about 2 weeks ago, and every single manager of every single one of these real estate investment trusts dealing with apartments, they were talking about how the market has gotten tight, they're renting space out, occupancies are rising, vacancies are down to low levels. Contrary to the government data, the companies are actually reporting that the vacancies are quite low, and no one is giving away free months rent anymore. Prices going up and business is great.
One quick question before we leave it, Chuck. I'm curious about, particularly when you're talking about an NVR or Sun communities that actually own land. A lot of these home builders have pared way back on their land holdings because, of course, they got bitten by having such big land holdings. As interest rates start to go up, I mean, how much of a burden is it going to be for them to have to go out and purchase the land once again? How quickly are they going to be able to ramp up and do that? Great
question. NVR is actually different because, unlike most of the other companies who did exactly what you just described and got into trouble because they invested all this money in land, NVR takes options on land. So they don't exercise the option to take possession or ownership of the land until they're ready to build. Completely different business model, and that's why they were profitable even during the worst of the downturn. The other companies are in a different boat. They do go out and buy land. In fact, a lot of them are trying to buy land right now because they know values are depressed, and they line up the land years before they actually build on it. It's a riskier proposition. It's also more profitable because ultimately if the market recovers, then they're going to own at much, much lower prices and be selling at much higher prices. So it's a much more aggressive model. So again, it's a function of how much risk you're willing to take, how aggressive you want to be in your positioning. NVR is just a cheap company, well managed, and will participate. Okay, well, we'll keep watching it, and we'll have you come back in and see how it does. Very good. All right, thanks a lot, Chuck Lieberman, for coming in this week. Appreciate it.